Let's go across now to Stephen Gallo. He is head of market analysis at Schneider Foreign Exchange. Stephen, as always, a pleasure. What's your analysis of what's going on there? That 118 measure has been tested once. Do you suspect it'll be tested again?
I think it could well be tested. I think, as I said to you last week, we need a major fundamental driver for speculators to take this lower and to get more indication that central banks are circumventing the euro system or the euro altogether. And we haven't had that yet. So I think, it probably will come in a number of weeks. We will test lower levels in euro dollar, but at least some of the aggressive selling from that initial devaluation that we saw last month is out of the way for now. I mean, what I would say to you at the moment, a lot of corporations in the Eurozone are filling their boots with euros, buying euros forward at these new lower levels. And that's providing a degree of support. This corporate demand for euros is providing a degree of support to euro dollar and to euro sterling as well. So, at the moment, corporations are very happy with these levels in the Eurozone, and we don't have a major fundamental driver yet to take this thing lower aggressively.
You say the corporations are very happy. I mean, this is great news for exports. Is there an idea that simply the euro is finding its right level and somewhere in the teens is where it should be? I
think right level is the way to look at it. I think, certainly based on the levels that the euro was trading at prior to the devaluation this year, it was not sustainable based on the level of debt in the Eurozone and, just the general level of Eurozone exports. So, yeah, I think that's a good way of looking at it. And, Germany is certainly benefiting from the weaker euro. We've not only seen that with Germany factory orders data, but we're also seeing that with the level of exports from the Czech Republic. I mean, a lot of the production of German goods takes place first in the Czech Republic before they get picked up in German exports. So it's a good sign for the Eurozone as a whole.
Now, moving on to look at what's happening in the UK, we've seen David Cameron speaking yesterday, George Osborne is speaking today. Are you expecting the markets to be very interested in what happens to sterling ahead of the 22nd of June when the budget is announced?
I think, for the time being, sterling is probably going to tread water, if not trade relatively solidly versus the euro and to a degree versus the dollar as well. We've already seen to a degree austerity measures put place in the United Kingdom. They're nowhere near large enough for the longer term and for the structural mess that is the UK's fiscal budget, but they're headed in the right direction. And I think the implementation risks are very low for the UK relative to the Eurozone. You don't get that degree of political haggling and shortcoming. So, the market knows this and is very well aware of that. And we've seen huge demand for gilts from real money recently. Also, central banks have been mopping up gilts as well. So, at the moment, sterling is seen as a very relatively solid liquid alternative to the euro. It's going to trade well, we think, in the second half of the year.
Stephen, just very briefly, your outlook for the euro, though, remains fairly high. You're still in the 130s, are you?
We think that's equilibrium. We think that's fair value. Now, we had some very relatively dovish comments from Bernanke overnight. They're not confident about the pace of the recovery. They think it will just be moderate. They're worried about the strength of the labor market. We think, actually, that the divergence between the United States and the rest of the world will actually narrow in the second half of the year, and that will work against the dollar.
Stephen, thank you very much.